Good morning and welcome to episode 4 of BuiltPlace's Housing Conversations. Sorry we're a little bit late this morning, we were just finishing off a quick chart. I'm delighted to be joined today by Nick Gregory, and we're going to just be having a general chat about the market and some of the latest data that's been coming out. And so please do get in touch with contact details down below, drop us an email or get in touch via Twitter or through the YouTube comments, and we'd be delighted to try and answer some of your questions over the next 15 minutes or so. So I'll shift over to Zoom and we'll introduce Nick to the conversation. Morning, Nick. How are you doing?
Hello, yeah, very good, thank you.
And so you're one of these people that will have been contributing to a housing completion over this period.
Yes, I'm going to talk to you about housing transactions whilst literally in the middle of a housing transaction.
And so far, I mean, it's been an interesting time so far. The Zoopla house price index was out today and it had some interesting stats on the market, and it looks like actually the number of sales agreed and transactions are actually going much faster than we might have thought. There's been a bigger bounce back in housing market activity, albeit it's going to take a little while for that to actually feed through into the HMRC transactions and the land registry transactions. You know, that it'll be over the summer when we start to see those.
Yeah, I guess there's two things going on. There's the transactions that were frustrated by the lockdown that were already in train. So when we're going to see those sort of come out in the wash, whether they do go through or not. And then we've also had the boost in the sort of viewing activity and demand from the end of lockdown. And I guess trying to unpack the two different trends is kind of crucial to see what's going to happen in terms of transaction numbers for the rest of this year, because presumably the pent up demand will from the break will run out at some point.
Absolutely, and so I've just flicked up a couple of charts from Rightmove and Zoopla. The Zoopla data on the side there is slightly more up to date, and it shows that the sales agreed have risen back above where they were prior to lockdown. I suppose you and I do an awful lot of work on housing need and supply and things like that, and we're used to the term demand being bandied around with wild abandon, and it feels like we're probably seeing the term demand misused even more now. I would probably term the demand on these two charts more as interest, and it's interesting that on the Zoopla data it is starting to turn down. But it appears that the summer period is going to be stronger in terms of transactions than we hoped, and we might even see transactions getting back up to where they were prior to the lockdown when in the HMRC data. For me, the big risk comes in particularly Q4 of this year when the employment furlough finishes, and then into Q1 next year when we've got a lot of the mortgage holidays coming to the end, as Peter Williams and I have discussed in previous episodes, and then clearly there's Brexit on top of that, which is probably under mentioned when discussing the housing market. So things are looking pretty good for estate agents and home movers at the moment, but there's still a massive economic shock out there, and there's an awful lot of people who have lost their savings, lost their income, lost their jobs, or maybe fearing that they will be losing their jobs when furlough ends. And so it's clearly that there's a divergence in the market there that is happening, and so we've got a group of people that are relatively well off and have maybe even seen an increase in the amount of money that they've got in their savings over the last few months because they haven't been going out, eating out, going on holidays and things like that.
Yeah, I mean, I think you see that in the Zoopla data. There's a sort of differential rate between the sort of top end of the market. you'd say not. You'd have more worries about more precarious employment and the sort of mid to lower end of the private rented sector, in terms of who's going to be hit hardest by these changes. Obviously, home movers and home buyers aren't going to get away kind of scot-free with this kind of massive economic shock, but it does look like it's going to fall disproportionately on maybe the lower income groups.
Yeah, that said, there was an interesting chart on the Zoopla release today, which showed that actually the rebound in sales agreed has been stronger in cities in the north of England, whereas the more affordability constrained ones have perhaps rebounded less so, and so it seems we're seeing a bit of a divergence there. That the kind of, you've got the equity rich buyers, less mortgage constrained buyers appear to be doing reasonably well, and then you've got those markets that are perhaps less affordability constrained, so slightly lower price to earnings ratios, albeit still very high in many places, are doing better, whereas the markets where you're particularly London and the south, high value markets where you need a big deposit and perhaps you were reliant on those high loan to value mortgages to be able to buy, appear to be the ones that are struggling so far. So for me, it feels a bit like a return to the housing market prior to 2013. I think I've said this before, before Help to Buy mortgage guarantee was announced, and so before the return of the high loan to value mortgages. I guess the big difference between now and then is that during that period, 2010 to 2013, London was racing away. House price growth there was absolutely astronomical, particularly in central London, the highest value parts. And there's a lot of debate at the moment about exactly what's going to happen to London in the future.
Yeah, I mean, there's been a lot of sort of wild conjecture that no one's going to want to live in cities anymore. They want to have their own space where they can work from home, have, sort of isolate from people in their own land. But it seems to me that sort of churn of young people moving to London and then moving away as they get a bit older and have family has always been there, and it's been a pretty constant thing. Obviously, it fluctuates up and down slightly, but whether that massively accelerates remains to be seen. But it's certainly not a new thing.
Yeah, it's interesting, and apologies, it appears I had a slight technical issue there where I was showing charts and you couldn't hear Nick when he was speaking, so sorry about that. Well, hopefully you didn't miss too much, but I'm sure it was all valuable. So what I will try doing is one of the data sets that we had that's just come out today, and it was the one that delayed us a little bit from starting, was the ONS data on interregional migration, and it's this data is a bit tricky, and you can see I was rushing because the time series is totally wrong on the bottom there, but you're looking starting back in the 1970s there, and the thing about London is London has always lost people to the rest of the country. The yellow bars there show you a net outflow of people from London to the rest of the UK, and so Nick, there's a talk about London having peaked, but actually what we're probably just going to see is exaggerated trends and perhaps a return to pre-2000 trends where people still come to London when they're young. They come here to study, to find their first jobs, but actually rather than staying in London, they're more likely to then move out to find a house in the suburbs rather than a 2-bed flat somewhere more central.
Yeah, I mean, as always with the housing market, there's so many interconnected parts. You briefly mentioned Brexit earlier. If London loses its status as a major financial employment centre and also just a major centre for people from various parts of Europe to come to and work in hospitality, retail, whatever, how does that interplay or work? Would you then actually see London losing population overall, rather than as the 30-somethings move out, always being replenished by people coming to study, to work, or whatever. I mean, that's critical to sort of the idea of London, I guess, as a economic powerhouse and a sort of growing city, that will have underpinned sort of the investment decisions and the strategic direction, I guess, of the GLA in terms of what to build, where to build. Is that we're going to need a rethink, or is that just overplaying the changes that are on the horizon?
Absolutely, and it has a big impact on the narrative of the housing crisis and where we deliver housing, because if you actually look closely at the statistics, the housing supply crisis is heavily concentrated around London and its suburbs and surrounding markets, and so the priority for supply has always been to increase it in those markets, albeit it's been held back by the Green Belt and other policies. And so with a lot of talk about planning and the reforming of planning, zonal planning and things like that, these sorts of trends are going to be very important to be aware of heading into the future. And I suppose it's going to be a conversation that we touch on next month. Next month, from next week, July is going to be themed our house building statistics, house building month, and so we've got a couple of different episodes planned for you. Next week on Wednesday, we've got Noble Francis and Brian Green talking about construction. Then on Friday, we've got Kate Barker and myself talking about house building stats. And following that, we've got some stuff on Help to Buy, equity loan, and also on self-build. So hopefully we won't have any technological mishaps like we've had this time, but it'd be great if you want to all join us. But I think for the time being, we'll probably end it there before anything else goes wrong. And thank you for joining us for episode 4.